Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Craig Erlam, Senior Market Analyst at OANDA. And today, Craig, we usually look at charts, but I think because actually there's more headline news going on to move markets, I think it's more important just to sit down, have a chat and really kind of talk through and explain to our viewers what's going on with global markets. Lots out there. We've got North Korea missile crisis, we've got Bitcoin above 10,000, we've got Donald Trump and hopefully finally getting through his tax reforms, and Brexit, that seems to obviously not go away. Anything you'd like to pick out, and anything really to move the markets over the coming week and certainly looking into the year end?
Yeah, as you say, there's so much going on right now, but if you look at the markets, you wouldn't guess it because markets have become so immune to so many things. You look at, like you say, Trump tax reform. This is a major bill. This is something that could have potentially have a significant impact on the economy, if not the consumers' pockets. And yet, it's because we've been talking about it for so long and it was priced in so long ago, markets not really getting too excited by it. If we went back 6 months and we had a missile launch from North Korea, markets were going to risk-averse mode. Gold would be higher, equity markets would be lower. What do we see this morning? Nothing. I think we're looking at old stories that are resurfacing. Brexit, again, of course, is another classic. Although we've actually seen a bump higher in the pound on the back of this proposed Brexit bill, because we could finally be moving on to phase 2 and talking about a trade deal. The pessimist in me says that the 55 billion euro number that's been touted is going to be rejected because it's probably going to be close to 4.5 to 5.5 billion with minor commitments after that. But I guess we'll see. I think the Bitcoin is probably the most interesting story at the moment because I think it's really something that's starting to get into the mainstream media, not just into this media itself, but right on the front page. Now everyone's talking about 10,000, huge psychological number, but also it means we're seeing a 900% rise in Bitcoin since the start of the year. Bitcoin was below $1,000 on the 1st of January. We should note that. It is a meteoric rise, and now it's getting people interested, and it's not surprising because the technology behind it is incredible. I genuinely believe blockchain is going to revolutionize many different industries. The question is, can Bitcoin survive? Are these levels warranted? And I think that's where the interesting part of this conversation arises.
And so for investors now sitting there looking at these markets, the markets seem immune to any kind of macro or geopolitical events going on. Well, just getting into the mindset of an investor now, is it a case of, well, 2017 has been a very interesting year, lots happened, markets and asset prices have risen. What are investors thinking now, and what, more importantly, what are your clients doing and thinking into the year end?
Well, I think the common thing that I'm seeing right now is that, and I think it was very prevalent after the last earnings season. The last earnings season was very good again. We saw strong growth in both earnings and revenues. That's always a positive sign when they both confirm each other. We saw that strong revenue and earnings growth in Europe, and that's been obviously a problem area for many years. The last 24 months, we've seen a significant improvement, and we're starting to see that over the last few quarters. Earnings are representing it. But you look at the US, we saw a really good earnings season. We didn't really see it push on. We're seeing it back towards these kind of record high levels, but we stuttered through the back end of earnings season. That suggests to me that investors are now getting nervous. They're looking at all the measures, you could look pre-PE, multiples, whatever, and they're looking at these and they're saying, are we now at a level where we're justifying the price, but what growth can we expect on the upside? Like, what can we realistically expect to see push on from here? And the fact that we saw these levels stutter at a time when we were seeing strong earnings suggests to me that investors are becoming a little bit nervous at these levels. They want to see more. Trump is priced in. Even fiscal stimulus may be priced in. We'll have to see what impact that has when that comes to the fore once tax reform's done. The growth that we've seen from companies is priced in. I think you've got to almost look at a long-term chart just to see what this rally over the last year, since November last year when Trump won the election, it's been incredible even by recent standards. Like we talked about how strong the rally was at times due to monetary stimulus and QE. Look at the rally that we've seen over the last year, and it's even put the monetary stimulus rally to shame. So it has been a very, very strong move over the last year, and I look at this now and I'm thinking, can we go higher? Yes, of course we can. There's always reasons to buy. Are investors getting nervous? And I think they are. And I think if we do see gains over the next 12 months, this may be famous last words, but I think if we do see gains over the next 12 months, I think they'll be on a far, far more gradual basis. Understood.
Craig, on that note, you are a Senior Market Analyst at OANDA. Thank you very much for joining us here today on Core Finance.
Thank you.